Investors and traders, welcome to the channel Market Chat Pattern. In this video segment, we are going to take a look at the key US stock indices as we always do for this video segment. Today is the 11th of June 2023 and I hope you guys are having a good weekend. So this is going to be the weekend review for these markets. This video is for educational purposes only and it is not a financial advice. New subscribers, thank you for subscribing. Old subscribers coming to watch the content, thank you for watching my content. Okay, so let's begin. So in this video I'm going to actually start the video by looking at the markets in a different way. So what we're going to do is we are actually going to take a look at what is the market sentiment has been like these days. So longer term subscribers will know that we have actually been watching all these pattern formations and we have been looking for higher prices for quite a while, whereas this rally has been quite a hated rally. So what do I mean by that? So if you look around, there had been quite a lot of negative sentiment about the market, yet the market prices, the stock market prices, they kept on rising higher. So the pain trade had been to the upside. So painful in two ways. A lot of people actually had been talking negative about the market, trying to short the market. However, the market kept on moving higher. So all those people who were trying to short have been hurt. And then those people who had been actually on the sidelines and not really participating onto the upside also being hurt in a way that they are missing the opportunity. So the utility cost of the opportunity. This is why this rally has been a pretty hated rally, and the maximum pain trade had been to the upside. And this is what the market likes to do. It likes to give quite a lot of pain because of the prevalent sentiment around us. So let's take a look at this. What we have here is basically the AAII sentiment survey. So what it is showing us is basically what direction do AAII members feel the stock market will be in the next 6 months. So this is a survey done for professional money managers, and it's a survey which is held in the market with a quite a good opinion about what is the sentiment is likely amongst the professional money managers. And here, if we just begin to look at from the 17th of May, where green is bullish, gray is neutral, and the red is bearish, we can see that the bullish sentiment was only about 22.9%, and look at the bearish sentiment about 39.7%. So this is about about 3 weeks ago. And then if we look at on the 24th of May, what we have is a slight improvement in the bullish sentiment being 24.7%, 32.9% being neutral, and 39.7% being bearish. So actually some of the participants who were neutral, they actually moved into the camp of being bullish. And then what we have is on the 31st of May, 29.1% excuse me are bullish, so that's the green part, 34.1% are neutral, and 36.8% are bearish. So that's the red segment. So what seems to have happened is that all those who were in the bearish camp, they have become more neutral, and that's why what we have got is actually a higher percentage in the neutral segment, and some of the neutrals perhaps moved into the bullish camp, which is 29.1%. Now this is the one which is the really important one. So the survey done on the 7th of June 2023, so this is last week. Look at, there is a real increase in the bullish sentiment. 44.5% are bullish, 31.2% neutral, and 24.3% are actually still bearish. So there has been a leap towards the bullish sentiment. So all those people who were either on the sidelines being neutral, coming into the bullish camp, all those or a number of those which were actually bearish, either turning neutral or in fact maybe even moving into the bullish camp. So this is a really interesting development in terms of the market sentiment, which is turning more and more bullish as we look at the data given by the AAII survey done. Another one which I want to point your attention to, so this is a tweet which was shared by Ryan Detrick, who is a chief CMT, so he's a chief market strategist at Carson Group LLC. So he was kind enough to share this picture with us. So this is a picture, I believe, of a recent cover from the Barron's, and what it says is that this market has legs. So guys, this is something which we had been discussing on our channels, and we have had several levels which were higher, and we were looking for the market to keep on moving higher and achieve those levels. Some of those levels have been achieved and even surpassed, and some of them we are still waiting where the market is able to achieve those. It is getting fairly close to those levels. So the reason I'm pointing out the sentiment part of it is that we have to actually look at the counterfactual, that this market has been going up since the 13th of October 2022 in the United States. The major indices, they have been moving higher with the exception of the Russell 2000, and what has happened is that now the sentiment is turning more and more bullish. So if we were to look at it from a counterfactual point of view, then perhaps it's time to actually fasten our seat belts, and we perhaps be a little bit more cautious, because I'm going to show you next is something really important, and perhaps we could have some meaningful correction on the way in the next couple of weeks to maybe 3 weeks time. I don't know, I'm just giving my thoughts out. I don't know what is going to happen or not. So what we are looking at here is basically the SP500 commitments of traders report. This report gets published every Friday. However, the data is essentially a little bit lagging, because it's collected, I believe, on a Tuesday, but the report is published on a Friday. So it's not a timing indicator, but what it really shows is that how the important market participants might be positioned. So here I want you to actually pay attention to this part. So what I'm going to show you, these beautiful colored lines which we see, the green line, the red line, the blue line. So the important one to pay attention to is actually these two. So the green line is essentially the asset managers or the institutions which are holding a position, for example, and leverage funds, in other words, are speculators such as hedge funds, and this is the blue line. So the blue line is negative 576,131 contracts, and it's a pretty bearish position they have had in a number of years. So if we just go back to 2016, even in 2016 we didn't have this much short position. It was, I believe, a little bit higher, but I could be wrong in terms of interpreting this. Pretty much pretty much at the similar kind of levels, in fact. So what I'm trying to draw your attention to is that from a sentiment perspective, there is still a lot of fund managers which are actually short this market, yet the market keeps on moving higher, inflicting a lot of pain. And what it means is that, as we have seen the AAII survey, where more and more money managers are turning bullish, at some point all these traders who have been short the market, they have sold short, they might begin to cover and reverse their position. And when the short covering rally when the short covering takes place, what it means is that when you sell short, essentially what it means is that you are looking to buy back that commodity at a lower price and profit from the decline in the price. But if, for example, the reverse happens, the price actually keeps on moving higher, then your position is in fact at a loss. So when covering, you still have to buy that position, which could actually add to the fuel on fire in terms of price movement, perhaps to the upside. So this is something which we have to keep on watching, and if the sentiment is going to change, then it's possible that some short covering rallies, we might begin to see some that sort of activity as well. Excuse me. Now we'll just move back to our analysis, and if we look at, this is the S&P 500 daily chart. We had been actually watching for this 4430 level, and we were looking for the market to go sideways to higher, and in fact this is what the market has been doing. it is slowly but surely grinding higher. There have been days where the market actually went nowhere, it just went sideways, and then we have had a nice rally. So last Friday it went there was a bit of a rally, and it seems to be moving in that direction of our initial target of 44.30. Looking at this on a weekly chart, 44.30, maybe even potentially 44.50 is the kind of the range. There is also a 4,500 level, but we have to be really careful once it reaches 44.30, 44.50, if in fact it will reach there. And this is just the monthly chart on that. Let's quickly go back and have a look at the NQ, the NASDAQ 100 futures. So this is the chart, this is the daily chart of the NASDAQ 100 E-mini futures. And here in fact we have had some stocks such as Nvidia, which is their chips are really being used to power the artificial intelligence. And what we have seen is the massive rallies in that stock, which has actually helped this index move higher. And also generally other tech stocks such as Apple, etc., they have been moving higher nicely as well, which we covered in another video, which I recommend you to watch. This in fact index, we were looking for a strong resistance to come in about 14,350. However, the momentum was so strong that it actually went past through that. But on the ES5, the E-mini futures, we are still looking for a higher price to come. So we have to really watch these markets individually. Although one of the key levels here on the NASDAQ 100 E-mini futures have been reached, the ES is still actually marching towards the kind of target that we are looking at. And with the sentiment part, we have to begin to be a little bit careful that perhaps there might be some sort of a turn in the market, and we could see some sort of a meaningful correction or a pullback in the next 2 to 3 weeks perhaps. I don't know whether it's going to happen or not, but there is a possibility, just because if we look at some of the individual stocks which have been powering this rally in the tech index, they are reaching certain kind of levels, and generally from the sentiment perspective, we just need to be watching these levels really carefully. And let's go to quickly our Russell 2000, because it also did something really interesting. So this is the daily chart of the Russell 2000, which is the it's a small cap stocks. It had formed a really nice ABCD pattern formation, and it just went nowhere after that. It went down, and then for quite a while it was in this triangle formation, just going sideways. And now there seems to be a breakout. One of the levels that we were looking at was this 1852 level, which was in fact a 61.8% Fibonacci retracement of these highs right here, and the stock has broken above that level. So that is a positive development from a price action perspective. Now, one of the things is that a lot of these breakouts, in fact, in the next 2 to 3 bars, they actually fail in their first attempt and move back into the range. And over there, either they'll just consolidate, develop energy, or they might actually retest the bottom of the range, and then they might be able to break out of the breakout finally. So we'll have to wait and watch. We have had a nice positive couple of days here. That's how it broke out of this range. And then last Friday and Thursday have been 2 days where it's just gone sideways and it is consolidating. But the important thing is that it was able to take out the swing highs here on the structure on the left hand side right here in this region, which is the top of the range. And in fact, it closed above the 1852 level as well. So even the small caps have begun to look better. And if we just look at it from a really fundamental basis, what we can see is that there is a series of higher lows, and we in fact are making higher highs as well. So that is a really rough basic understanding of a uptrend. So this is what we are watching from a momentum perspective, really short term. What we have is let's actually take a look. We have the price above the 20-day moving average, which is the blue line, and we in fact the price is also above the 200-day moving average as well. But the 200-day moving average is above the 20 day moving average. So this is a slight negative, so perhaps there's going to be a little bit of a consolidation before these two moving averages they actually coincide, and the 20-day moving average begins to close above the 200-day moving average, and that's gonna make it from a momentum perspective also nicely positive as well. So guys, this is what we are watching for these in these markets. And what we mentioned about the sentiment, it doesn't mean that's something negative. It is just that we had been watching for this market to move higher for a long time, and now this kind of sentiment, and we were doing it while the sentiment was fairly negative. Just going back to even the 17th of May, you look at only 22.9% of the participants in the survey were bullish. However, we had higher prices as our targets, and now there has been a pretty big jump between the 31st of May and 7th of June data, and that's what we need to pay attention to, that perhaps now the sentiment is turning more bullish. And if we were to just look at it from a counterfactual perspective, we just need to be more careful that perhaps there could be some sort of pullback development taking place in the marketplace. And we just hope that the levels that we are looking at least in the S&P 500, we are able to meet those. We have already met and exceeded the target we were looking at 14,350 in the NQs, so the NASDAQ 100 future. So that's quite nice. And guys, this is what we are looking at in the marketplace. If you like our analysis, how we look at the markets, we look at pattern recognition, Fibonacci ratios, the retracements, the price projections, please do subscribe to the channel. And if you found the video of educational value, then please do smash that like button. It just helps me get an idea that people like the video, so it just encourages me to keep on producing these videos for you since you find them of educational value. Thank you very much. Good luck and good trading.